My guest today has been covering the precious metals landscape for 35 years, and he says the attention he's now seeing in the silver market is something he's never seen, and it's causing him to relook at numbers again and again. We're going to take a deep dive here today with Ted Butler of Butler Research. Ted, welcome to my show here at StansberryInvestor.com. Good to finally speak with you after all these years.
Good to speak with you, Daniela. Thanks for the opportunity.
Absolutely. Well, I want to take a deep dive, I've said, to look at what's happening on the silver front. But first, I need to talk about the breaking news here this Monday of Elon Musk now jumping on the Bitcoin train, Tesla buying 1.5 billion of Bitcoin. What does this signal to you, Ted?
Well, I'm not a Bitcoin expert, proponent, and I'm not necessarily against it either, but it is big news. And what I would take away from it is that, well, he didn't buy it today. He bought it, a week or two ago, and the SEC filing was today. But to add 15% or so to a market cap in Bitcoin that was going for like $700 billion before today, it added close to $100 billion in total market cap to Bitcoin. So that makes you sit up and take notice. But I can't help but make the connection. I guess I make it with everything to silver. And to think that the value, the market cap of Bitcoin went up by $100 billion today, and to look at the total market cap of 1,000-ounce bars in the world of silver of something like a little over $50 billion. That just the increase today in Bitcoin was twice as much as the total value of all the 1,000-ounce bars of silver in the world, which is really the only form that matters. And I also get this feeling that one of these days, I don't know if it'll be Mr. Musk or somebody else, is going to make a similar announcement about silver. And that's a day I look forward to.
Well, it's funny you say that, because I had a lot of my viewers reach out saying, imagine if Elon Musk just tweeted the word silver, what that would do. But let's talk about the silver market now. As I've said, you've covered this market for over 35 years, and you say you've never seen a scenario like this before, right, Ted?
Yeah, no, I mean, the amount of interest, I'm scratching my head a little bit, because the move in silver, while it was, nothing to sneeze at, we jumped maybe 10% at the high and basically gave it all back. 10% move in a commodity. We had 15% in Bitcoin today. It's a much larger market. Didn't seem like that big a news to me, yet it seems that it was all people were talking about.
Yeah.
I don't think much of the conversation was completely well informed, but at the same time, even the acting chairman of the Commodity Futures Trading Commission came out and made a statement that they were looking at the activity in the silver market. Based on what I see coming down the pike, they're going to be paying a lot more attention in the future, because I think that was just the start.
So there's a lot of theories right now, Ted, circulating about what's happening in the silver market. One of the top questions we're getting is, with the inflows moving into silver ETFs, how are they sourcing the silver?
That's an excellent question. First of all, over a 3-day period in the SLV, the big one alone, the big silver ETF, there was like 110 million ounces deposited or recorded. It wasn't physically moved, because you can't move that amount of silver in that period of time. But it was in the warehouses already, and earmarked it for ownership in the SLV. Well, we can eliminate where it didn't come from. It didn't come from a sudden burst of new mining or recycling, where total world production is like 2.5 million ounces a day. So it didn't come from new production. It came from existing silver inventories. There's no question about that. But the real big question is who parted and by what mechanism did they release and capture this amount of silver that's already existing in the warehouses in London? And how did it come to the market? I mean, why would the sellers of this metal sell it so cheaply? It's like they had people beating down the doors to buy silver. It could have and should have jumped $10, $20 an ounce or more. That kind of buying, there isn't that much silver out there that's available in the world. So your question is well taken. Where did it come from? How did it find itself to the market? The only two possible explanations I can see is that the metal was leased by one party, and that one party would have to be J.P. Morgan, because they're the only ones that would control that amount of silver that's even close to being conceivable. So they, in my opinion, leased the silver to other authorized participants of the SLV, and those authorized participants did deposit the silver to meet the buying interest in the SLV. But it's a form, leasing is a form of short selling. So basically, I think the silver came in as a short sale, which means it has to be paid back one day. The only other possible alternative is that J.P. Morgan just sold it outright, without leasing it to anybody else, which is the only other conceivable way it could come to the market. Both are highly illegitimate, illegal, fraudulent, whatever you want to say, and the sellers, no matter how it came to market, were doing something highly corrupt. I mean, it's we have a law called the law of supply and demand, and when you all of a sudden have a tremendous surge in demand and no obvious increase in supply, the price must explode. Okay, the fact that it didn't means that there's something really hinky here, and I think I've narrowed it down to the only two things I can see: leasing or J.P. Morgan dumping.
Okay, so another feedback that came back to me is that there's actually no shortage of the 1,000-ounce silver bars. It's really in the smaller coins, but you're saying not so?
No, I'm saying that there's a shortage in both. We don't have to argue about the retail side, because I think every retail dealer over the last week or two has his business model has changed. His business operation has changed from finding customers to buy metal to finding metal to satisfy people that want to buy. So there's no question that the retail side is basically tapped out and hand to mouth. But I would say the same thing is true on the 1,000-ounce bar market, and it's not widely recognized. In a lot of people's minds, there's this idea that silver is, that there's unlimited supplies of silver, and it's like, I don't know, falls from the sky whenever people decide that they want to buy it. But it's highly limited. There's maybe 2 billion ounces of silver in the world, in the form of 1,000-ounce bars, and between the COMEX warehouses and all the ETFs combined, something like 80% of that 2 billion ounces is already spoken for, and we can see in visible inventory. So there's only like about 500 million ounces tops that's available, and this one fund, SLV, took 110 million ounces, more than 20% of all the silver that existed in the world, and prices did bupkis. It hardly moved at all. So that's something wrong there. It's like it can't be.
Would you? I had William Millencope on at tail end of last week, and he was saying that it's exactly like when the paper shorts were burned and squeezed by a rush for physical demand in palladium. I'm not sure if you followed that story, but do you see similarities there? And then palladium ended up, bursting out fourfold in price.
Absolutely. I mean, it's a direct correlation comparison. I've made the comparison myself, many years ago. So yeah, I mean, the only explanation, the real question here is that why is silver so cheap? It's like still like 50%, both its all-time high in 1980 with the Hunt brothers were around, and 50% below the high recently in 2011. I mean, it's every other commodity is basically up. Silver is still down. There's got to be an explanation. The explanation that I've come up with for the last 30 years or so is this concentrated short position on the COMEX. There's four large, we call them commercials, but they're not really commercials. They're speculators, and they're short. In the last Commitment of Traders report that was released on Friday, these four traders, probably mostly banks, are short 326 million ounces of silver, and they added a tremendous amount, 7,000, close to 7,000 contracts, 35 million ounces in the week that ended last Tuesday, and they're just doubling down. You got four big shorts that are just aligned basically against the world, and they're doing everything they can in their power to add short positions, borrow metal in London to deposit in the SLV, anything to keep the price from rising. And the next question is, well, why would they do that? And the reason is that they have such a large short position that it's their only alternative. They got to keep this price down, otherwise they're going to be destroyed. And it's obvious from the data that comes from the Commitment of Traders report that's put out by the government. That's the only interpretation.
So let me ask you this, Ted. If there is funny business in the silver industry and blatant manipulation happening, why would an investor invest in silver then if the price will not be allowed to go higher?
I heard you ask that question several months, I think, back.
I asked Keith Neumeyer, yes.
Okay. Yeah. And I was like, I happened to listen to it. I wanted to reach through the computer screen, okay, and interject, okay.
And here's your moment.
It's a great question, okay.
Thank you.
The answer is this. The answer is there's two kinds of manipulation. There's an upside manipulation and there's a downside manipulation. We're all familiar with upside manipulations. The Hunt brothers, coincidentally, manipulated silver up to $50 back in 1980. And there's been other instances of manipulation to the upside in the copper market by the Sumitomo trader that we referred to as Mr. 5% or whatever. When a market is manipulated up and the price is high, that's the last thing that you want to do is buy it, because a manipulation is an artificial price. So an upside manipulation creates an artificially high price, and that's the last thing you want to buy. A downside manipulation, on the other hand, which we have in force in silver, is exactly the opposite, that the price is artificially low. So that becomes the very best reason to buy silver, is because it's artificially manipulated to the downside. And we know from history that manipulations have to end someday. And one day when they do end, okay, they end abruptly and violently. And if it's an upside manipulation, then the price falls out of bed. If it's a downside manipulation like we have in COMEX silver, then the price will truly explode. You couldn't find a better reason to buy silver than because it's manipulated.
Very well said, Ted. Let's wrap with this, because in past interviews I've brought up triple-digit silver. Where do you see? Okay, with all this enthusiasm in the silver market now, people paying more attention to silver, have you changed your forecast? Where do you see it headed now?
I haven't changed my forecast, and I see it headed to the heavens. I mean, people want to put numbers on it to make them, make them feel better or something like that. I'm not so much looking at the number. It's going to be a very high number, times factors of what we are today. Okay, that's easy enough to say. But what will be the key to look at to judge how high it might get is this concentrated short position's got to fall by the wayside. These shorts have to be carried out on a stretcher and just thoroughly disgraced and destroyed, which is going to happen. Okay, and then we have to see how things always overshoot. We don't know how high prices can go in a blow off, so I'm hesitant to throw a number out because it sounds crazy, but there's enough people out there saying 50, 100, 200 that what difference does it make? It's going to go substantially higher than it is today, and I don't see it going substantially lower since it's already manipulated and priced artificially too low. So why spend a lot of time trying to figure out what the exact number? We're not going to be able to guess it. It's whatever. It's going to be much, much higher than it is now. The best thing you could do is to hold as much, own as much as you can. I wouldn't do it on margin. That's always dangerous. But I'd buy it if and hold it, and not be so concerned with how high it might go or when it might go. I always think it's any moment, but that's hard to quantify.
Let's wrap with this then, Ted. I'm assuming you only like to hold physical silver in its physical form.
No, I mean, I like silver in every form. It's like I hold it in physical. I hold it in SLV. It's like I hold it in call options. It's like you have to go pretty far to find what form of silver I wouldn't hold it in.
Okay, all right. So the miners, you like the miners?
Sure. I mean, look, I'm a commodity guy. That's where I cut my teeth. I'm not a stock analyst, so I don't talk about individual stocks. But yeah, how could you like silver and not like the silver miners?
All right, silver to the heavens.
Some people like one silver ETF and they don't like another silver ETF. I don't understand that.
I gotcha. Well, silver to the heavens. I'm sure a lot of investors are praying for that tonight. Ted Butler, nice chatting with you, Ted. It's been a long time coming. Thank you for joining me here on Stansberry Investor.
Thank you.
And thank you for watching. We'll have much more for you on stansberryinvestor.com. In the meantime, keep following us. Share us where you watch us. We're on all the social media platforms. Thanks for watching. I'm Daniela Cambone.